Hello, Pumptown. Welcome. Hope you're all doing very good. Hope you didn't go too ham today. And I pray you're all doing very well. Happy Thanksgiving to my American brothers and sisters. Let's celebrate, shall we? So, the last time we were hanging out, I was more bear. Well, when I was public, I was bullish on before the open. And then once we got that information on Monday, I flipped bearish. So I was looking for price action to start moving towards sell side liquidity. We ended up getting that delivery yesterday, or a nice delivery. And then today was the Thanksgiving holiday, so you could see why you wouldn't want to be overdoing it and stressing it out. So this here is the new week opening gap. So that's that must be something else. No, that's it right there. This must be something else. Yes, there we go. So this is the new week opening gap here. And this is the volume imbalance from Friday and into Monday. So there is a new week opening gap, but it's also a volume imbalance. So both levels will be very sensitive. I know this might confuse you, but you got to double check with the opens of these candles because they can trick you. So how you do that is in the top left corner, there's the O here, that's for the open, right? And what does the open say? Does it say 20,935 even? When I hover my cursor over that candle, it does. So this is why you would use that there as your new week opening gap and not that. So this might be confusing, but this is a down close candle, but it's showing green or up close or white or whatever color you have it. It's showing up close, but the open was here, right? So we have two sensitive price points. We have the volume imbalance between the wick here, well, the bodies really, the body here and the body here, and then we have the new week opening gap. So that's what we were aiming for today. It would have been great if London would have smashed up in there and then we could have cruised down for New York if it wanted to be dynamic. So just look something like this, ride up and then slam down like that, ride up and then slam down if it wanted to do something. It looks like it wanted to, and just didn't want to do anything today, which we expected. So when we were here, I was mentioning, in the Twitter DM, study this here. And, if I was looking for a trade, maybe I would have taken that. Maybe it's not even a fair value gap, but that is, right? Not even running to the price point I'd like to see it at before making an order block here and then trading back up. So that would have been the first sensitive price point I would have been looking for violence to come out of. The second price point is the midway of the new week opening gap. So once that candle closed bearish here, sell side delivery candle here, confirming these three as a swing high in a premium market, in a fair value gap, breaker, or mitigation block. Yes, breaker. Right. Well, you could use this guy too. Right in there. So it hit the rejection blocks, couldn't quite dig up into the bodies, and that's fine. Because the wicks is where we would want to see the most sensitivity if it was really bearish. And if it wants to deliver at the open, it could just open up and choose violence. So anyway, once we had this candle closure here, I was mentioning in the private DM, study it, do not trade it, put a guess as to where you would like to see price go from here, because this is an order block at a sensitive price level. So we didn't get one here, but we did get one here. Okay, so let's study it. It looks like it did its job. Where did it go? Well, if you had this fair value, I was picking the candlestick with no tail on. I still think it can get down in there. But if you had this on your charts, you would have had target acquired. So you got your liquidity sweep, higher time frame, premium array, new week opening gap, consequent encroachment, change in the state of delivery right in here. So this would have been the very first place I would have been looking for sensitivity. If I was convicted, I did not take this. I did not trade. But had it been any other day, oh yeah, this is everything we go for. London does what? Nothing. Great. Check one. Starts riding up, right? 11 a.m. The whole Judas for the whole entire morning. And then, there you go. There's the setup. There's the trade. And, what did it offer? It offered 66 ticks. That's not bad. 40, 50, 60 ticks is a payday. If you were looking for something very specific in the market, the very thing that I train you for, and this was your job, and you were finally disciplined and just submitting to a price action model, this would have been a payday, right? You weren't concerned about these candles moving up. You were just looking for something specific, and that specific thing happened here, and you would have gotten a beautiful, stress-free trade on, an unfavorable, really sloppy day, and, no drawdown. Now, would you have gotten that? I would have. If this was not a banking holiday, I would have so ate that. Right there. Just that nice, big, heavy close. You see how this tail isn't very large like this one, or even this one here? Okay, it's very small in comparison to the range that it made. When it's like that, it's showing that it's really heavy. If it would have closed below this here, it would have shown an even more relative weakness in order flow. And that's how we would be measuring that in real time. So once you have this big slam down, I would have totally entered there. Had I, wanted to trade today. But I don't, and I didn't. Pat myself on the back, gonna peacock around the house and cheerlead myself into military grade discipline coming 2025. Let's check out gold. Gold was a butt nose that we can expect that for banking holidays and last weeks of the months. So you guys know I was short from right in here. And I actually collapsed the trade before it dropped. Somewhere in here before market close. I didn't want to pay overnight fees because I was anticipating this to collapse, continue down. It didn't show me a willingness to want to move at the time that I wanted to see it. So we had one target acquired. No, I didn't pay myself. I was looking for it to start dumping. And so, yeah, I ended up collapsing the trade just before market close. When I woke up, I seen this, came down here, and then I was like, well, I wouldn't have been stopped out, and the trade would be at break even right now if I hadn't have closed it, but it's just being really lame. So I closed in some profits, so yay me. It's annoying. It's just being a butt nose. And I mean, we can expect this, just don't let it get to you when price is being weird. So Euro USD. So what we were looking for was a nice strong close on the daily time frame above the midway point of this bearish order block. This was pretty lame, and now we don't have the fair value gap that we were seeking. So again, we could expect this at the last week of the month. Now, I wouldn't be opposed to the idea that we make a down close candle here with this wick well below this one, because this is our, if we can keep that, that would be our new fair value gap range. So just imagining that the next candle, hits the reclaimed order block, snaps up, and then closes up here somewhere, that would give us a beautiful fair value gap in here. And that would be in the premium of our, anticipated breaker block. And that would be our unicorn. So just like I was saying here, let's not get ahead of ourselves, but this is what we do to anticipate price when it's met all the obligations and meeting conditions for a trade. So we've got a big giant stop hunt, and we're just aiming for something above the market. This here is telling us a lot. So we have closed above the midway point of it. Great. That's showing some strength in order flow. So we'll just let it do its thing, and then maybe December something happens. Maybe we dance around in here for a bit, one more dip, and then rip. I don't know. But we'll take it day by day and do what the candles, tell us they're likely going to do next. BTC, just for my homies here. This is gorgeous. Like, I don't want to pick a top. It's not our jobs to pick tops, especially in very, very bullish environments, because it's all about trend, and the trend is your friend until it, steals your mom's VCR and sells it back to you. So we would expect a higher low in the trend to materialize right there. Actually, that is a protected low until it's not. That would be a short-term shift in structure because of this price run here. So beautiful with the swings. This would be our short-term shift in structure, but we're not there yet, and we've got what you guys call a bullish engulfing candle. So I like that. I would consider that a better probability being in this little discount here. So this is kind of well, not exactly that, but let's see here, about 104.8, I would say, somewhere around there. And then how far we dip back into the range. Now, because this wasn't a violent dip and it didn't take liquidity, this ride up is going to be emotional, and I'll show you the difference here. Okay, so you're looking at your trend, and you've got your protected low. This is the bottom. And if you weren't in the Discord or part of the Leverage Mastery, called out in real time with you guys. It takes structure here and retraces to a discount 786 random retracement perfectly. Now that's the higher low in the trend after the shift. Okay, so you got a swing high here getting blown out. Discount retracement. Are you considering that a trend shift? No, we're bullish. It's in a discount overall, and we're bullish. We buy dips here. So we bought this dip. It rides up, comes down for what? A higher low. What was that? That was a sweep in liquidity here. And I want you to notice the violence that comes out of that move. Okay? Look at how this one here sweeps these equal lows, and look at the violence come out of there. And there's your bull flag, high probability bull flag here. And then look at the violence right to this double top here, where people would be having their stop losses because they're short, because they're smarter than everybody. But anyway, comes down, and this one actually got me. I was pulling from the bodies here for my retracement, and I was considering that the bottom, and she got me before she took off. So logic is on point. You know, if you lose that low, you widen your range. Well, son of a gun, there it is, bang. I had slept on that at the time, so that one did get me. And I'm not, it's like, I'm traders lose, we lose. That's what we do here. We're professional losers. Anybody who's trying to pretend like they're just 100% win rate and they're just savage, even though you can see the price is clearly bullish, you'll lose trades. We all do it. So, hang around with the people that actually show you losses. Anyway, logic still remains solid. Look at the sweep in liquidity here and look at the violent move that comes from it, right? Look at this one here, comes down, and that's your high probability bull flag after the stop hunt, and it snaps up for one more. Okay, now this is your higher low in the trend, so you've just got a series of higher highs and higher lows, higher highs, higher lows, and this is where we're at. So the next place, so it, you can say it's random, whatever, but that swing low here, 1, 2, 3, it's 3, not 5. Don't listen to anybody else. It's 3. 1, 2, 3. That's your swing low. There's not another one to way the heck down here. So if we drop, we're going to need a discount market here at equilibrium, just from where we sit now. And, people might not be ready for that. And there's going to be a lot. I mean, there was a retarded amount of liquidations in this because people were so stupidly emotionally bullish. And like this liquidated, I think it was like, I can't remember. I don't want to make up a number, but it was large. It was large. It was like it could feed the entire world for 10 years large. So anyway, there's even more down here because buying pressure, yeah, if it comes down here, you're going to learn buying pressure here soon. So that's on the table, by the way. Don't think that's not on the table because it totally is. We could get an absolute violent, majestic dip that would send everybody off the balcony. And where would it stop? Probably dead in its tracks at that double bottom. And I would still be bullish. As long as this low here remains intact, we are so bullish. That's gap risk, by the way. So the higher you buy, the more you're exposing yourself to risk. And all it is premium and discount. Don't overthink it. Don't overcomplicate it. Okay? It's premium and discount, wherever the hell we are now. There. That's all it is. That's all it is. This is a premium market. This is a discount market. It's not anything beyond this, okay? So at the moment, we're here basically, right? That's a major protected low. That took this bull flag here, took these stops right there. Boop. Right where the books tell you to put your stop loss for the bull flag. Boop. Bought and rippage. So this is what I'm saying. Your most dynamic, majestic moves come from everybody's stop hunt right there. Bang. So that's my point in where we are right now. So we could see it be rather lethargic on the way up, right? Kind of like this. It's just because it's the holidays. Now, in my humbleness of opinions, a Santa Claus rally is coming this year. We haven't had one for a while. There was some like weird crypto high coins last year, I believe, and AI was last year. AI and gaming stuff was last Christmas, and then the one before that was high coins. So there's always like some weird Santa Claus rally in some ecosystem, but I'm in my opinion it's not that there will be, it's that this year has the probability that Bitcoin could have its Santa Claus rally. So maybe one more sketchy dip. I don't know. I can't tell you that. All I can tell you is that at the moment, we've got a swing low here for a higher low in the trend in a discounted market. So I'm still bullish. Okay. And then you go to your 4-hour time frame and you can see where all the shorts have their positions to sell. So if you're in a short position, all their stop losses are up here. They're buy stops. You have to buy your position to close it. Who are you going to sell to? All these losers here buying. They have their hands out in the market going, here, take my money. I know more than you and the market's bearish. Well, guess what? Not one single double top has ever made it out alive. God bless you guys. Thank you for joining, and we will see you later. Peace.